uh, the next step is to reconcile your book account, your book. Yeah. So firstly, you have the ending cash balance in your book that is prepared by your accountant. Okay. So how you reconcile it? Firstly, you have to plus collections and interest. Okay, what does it mean by collection and interest? For example, um, uh, you have collections. For example, you receive interest revenue, right? When you keep your money in a bank, usually you will receive interest revenue, right? Like every 6 months or every year, once in 1 year. So when when you receive the interest revenue from your bank, do you know it? Will the bank call you and say, congratulations, you get interest revenue? No, they never do that. So when you print your bank statement, you will see uh, like plus interest there. But when you check your book account, you never see any interest, right? Because you don't know that you receive interest. That's why you plus interest here manually. Okay. And the next, minus uncollectible items. For example, when you have the bank account, you have to pay some amount of money every month or every year. So the bank will automatically cut your money in your saving account, but they never call you for that, right? They never call you, for example, hello Mr. A, we already cut some amount of your money in our bank for the uh, bank charge, something like that. No, they will never call you for that. So when you print the bank statement, you will see like minus bank charge there, or annual charge, annual charge. So you have so the bank already recorded for you, but in your book, but your accountant still not recorded, right? So you have to manually minus uncollectible items. Okay. And then your plus or minus any errors. Sometimes we do some errors, and then at the end equals to adjusted cash balance. Okay. So at the end of the time, you see here bank statement balance and book balance different. This is 2050, this is 1404.58, not the same. So you make the reconciliation here, then finally you get the adjusted book balance. You have to find this equal. Okay. So after you make the reconciliation like this, the bank reconciliation like this, you have to make the adjusting entries. Okay, you have to make the adjusting entries. You will need to make adjusting entries for this or for this. Okay, the answer will be you have to make the adjusting entries for this one, for the change, for the reconciliation to the book balance, because this one is the bank statement. You don't need to make recordings for these changes. You have to make recordings for these changes, right? Because you manually record, you collect money for $85 and interest you get $8.42. Okay, so you have to make the journal entries for this, the adjusting entries. So cash on debit side, collection expense on debit side, and note receivable on the credit side. And then in the interest revenue, you will record cash and then interest revenue. Okay, we go back here. You have the deduction in your book. You have to pay automatically. Yeah, you have to pay $23 and $30, right? So so this one automatically already record by your bank, but you still not, right? So that's why you make the reconciliation here and you make the adjusting entries. How? Here, miscellaneous expense 23, cash 23, and account receivable T Woods $30 and cash 30. Okay, so remember, you have to make the adjusting entries for the thing that you list the items here. Okay, 1 2 3 4. Okay, not in this side but in this side for the adjusting entries. Okay.